Hello traders, hope you guys well. This is Julio Pinero. I haven't done a webinar for a while. I'm doing this midweek market focus. Um, Today is the 19th of November 2014, and I'm gonna get straight into business here. I'm gonna show you what I've traded myself first, and then I'm gonna show you some of the um, other trade that I'm in at the moment, and then we're gonna scan through and then see what's happening. So the first one is Canadian, USD Canadian dollar. What I like to do, gonna go through the basics first, as in higher highs and higher lows. So that'll be phase one, phase two, phase one, phase two, phase one, phase two, and then again phase one, phase two. So these are the cycles. It is giving high highs and high lows. Let me just put the highs here quickly for you, and this will be the lows down there. So you can see that I'm actually looking at the cycles and not the individual bars. So I'm looking at the cycles here, right? So that's one cycle. Each cycle will have a phase one and a phase two. That's another cycle which also has a phase one and phase two, and so on and so on. Okay, so let me just delete these lines, otherwise it's gonna get too messy. Right, so now I'm gonna be drawing some of the trend lines. So the trend line support will go here, and then I'm gonna copy and paste it, and I'm gonna put the other one somewhere up here. The one at the bottom is the important one, okay? So the trend line support is the one that is very, very important. Then the one at the top is not very important because you're looking to buy anyways, and the trend line support is where the stop loss is going to be anyways. So right, now I like to cover the buying zone. Some of you will be wondering, what is that about? Well, the buying zone is essentially what you have to do is to spot the the channel, which we did, and then if this is 100% and you split into 4 sections, this will be the first quarter, roughly speaking. Okay, you can call it the first quarter. You can call it, I call it the 20% buying zone. Okay, I call it the buying zone down here. So it'll be 20%, so it's just under a quarter. I mean, it doesn't really matter where you put the line, when you put it down here or there or there. It doesn't really matter as long as you know that this is the first section and you'll be looking to buy in this area to make money as it goes up. Same thing here, make money as it goes up. This is running live now, by the way. Same thing here, so you can make money as it goes up. Although this is outside the buying zone. Okay, you see? So this is outside the buying zone. This is inside the buying zone, inside the buying zone, inside the buying zone. Okay, so it's just the first little section here based on your channel. Cool. I'm gonna delete these lines, just gonna leave the channel on. For those of you who also look for trend line for RSI convergence, looking at the last two swing highs, which will be these two guys there, and then it'll be those two. So it'll be that one with that one, and then this one with that one. Okay, so that's pushing up, that's pushing up. So that is called RSI convergence, and then when it pulls back down, the stochastic, sorry, becomes oversold. Okay, very similar indicator is the RSI, which also has convergence. Okay, although the RSI is not oversold as opposed to the stochastic, which it is. Okay, and then that's a low test bar, and then when it shoots up and the phase one kicks off to the upside, then you're going to see a hook down here on the stochastic indicator. So from oversold is becoming less oversold, and then it's gonna be going up to like somewhere up here usually, and then here will be becoming overbought, and then you'll be looking for turning points up here again. So you'll get 10 points down here, and you get 10 points down here. Okay, that's what we use this indicator for, essentially. Right, now, do we recognize this last bar? Now we have jumped onto another point on the checklist, which is called price action. Now, price action is talking about the shape of the individual bars. Now, this should be done at night. So what I've done is looking at yesterday's bar, which is the bar that is the only bar that has closed, the most recent bar that has closed. So it is yesterday's bar. Okay, because today's bar, which is the bar next to it, the green bar, is running live. So, and it hasn't closed. Okay, it will close tonight. So I'm looking at yesterday's bar, and that bar is a Lotus bar. That's correct. That is a Lotus bar for those of you who spot it. And Lotus bar indicates a potential turning point in the market. So consequently, the market should be going up. Okay. The one before looks like a Lotus bar as long as the tail is minimum half. So actually, it's not a Lotus bar. Okay. I mean, you have to measure it and see whether this tail is more than half than the rest of the bar, which doesn't look like. Anyway, this one is definitely a Lotus bar. This one down here. Okay, that is definitely a low test bar. That is definitely a low test followed by another low test. That is a high test and a high test. So here market goes up, market goes up, market goes down, market goes up, high test bar, market goes down, low test bar, market is going up. Now whether it continues or not, we don't know. But based on the pattern, it should. Okay, here we're trading patterns, all right? We're trading repetitive patterns, something that happens over and over and over again for a certain period of time. So then it becomes something common, something that happens over and over again. So you're taking advantage of those common patterns by taking them over and over and over again. And then you'll obviously, when you backtest it, you'll see how many, what's the percentage, what's the return when you take those particular patterns. And then obviously if you're happy with it, then you can stick to that particular way of trading. And you can, if you're not happy with it, you can always tweak a little bit here and there, change a few indicators and adapt it to your particular checklist or trading style. So, okay, that's all done. Now I'm gonna extend the checklist a bit more. I'm gonna go into Fips now. I'm gonna go for from the previous swing low to the most recent swing high, stretch the lines, and it goes there. So it is actually qualified on the, well, it's actually like halfway through. So from the previous swing low to the previous swing high, pulls back down to the 50 fib, which is halfway through. Well, the full cycle has closed and opened below, so it is not qualified, and it didn't touch the 618, so the fib is not qualified. Okay, so no tick on the box on that one. Now let's have a look at the reward risk ratio. So let's assume that's the entry and that's a stop loss. The reward risk ratio will be like a 3-to-1 reward to risk, which works out to be like a 1.272 Fibonacci extension level 1.6. Yeah, okay, the 3-to-1 is I mean it's like a 2.5-to-1 to the 1.272, or it is like a 3.5-to-1, 3.5-to-1 up to the 1.618 Fibonacci extension level. So yeah, 3-to-1 is not a bad trade. If you keep on taking them, long term you make money. Okay, so that's the Canadian, USD Canadian dollar. Next one is the Aussie. So these USD, sorry, Aussie USD. So it's Australian dollar versus US dollar. Now here I've done my analysis already, and here the market is giving lower highs and lower lows. All right. So these actually lower highs and lower lows. Market is pushing down. is giving RSI convergence by looking at the last two swing lows down here. It's also giving hidden divergence here by looking at the highs, and it's also overbought as well. Now there is a trend line resistance going along, pushing down. That seems to be the end of phase 2, beginning of phase 1, and today is kicking off nicely here. Okay, with an entry here and a stop loss there that is now kicking off to the downside. So these are the best two charts that I've seen on Forex in this moment in time. Now you can also look at the moving averages, they're all aligned, so they've got the right order, right alignment, separation. Okay, so you have the 20, 50, 100 and 200. I suggest to have just the 20, 50 and 200 if you only have the 50 moving average. Okay, cool. So now there is now having a bit of a sell-off. Phase 1 seems to be kicking off to the downside. So if you haven't entered this trade, it's late already because it's already in the trade already. Okay. Okay. Let's see what else. This is ranging at the moment. So it's forming a big range. It's finding a level of resistance at the top. Okay, there's a bit of a range here. And level of resistance up here, so it hasn't closed or opened above this line, therefore becomes a very strong level of resistance at the top. Okay. So that's the range. It's pretty much kissing the 200. It hasn't touched yet. And it's actually the market is just ranging at the end of it. And is overbought up here. So the market is overbought. And if you look at when the stochastic becomes overbought and oversold, you see that up here was overbought, market goes down here is oversold, market goes up here is overbought, market goes down here is overbought, oversold, goes up, overbought, and is due to turn back down again. So based on even down here too, see that? So this one here hasn't reached the bottom. Obviously there was no bottom in this moment in time. The bottom was there based on this one, and it went down to the bottom. Was 10 out of 100, so that's very much oversold. And then from there it's gone up to the top bit pretty much, and then from there came back down. So they've been all spot on. Turning point, turning point, turning point, turning point. Well, we shall see. But out of the past 5 examples, they have all turned. Okay, therefore it should turn because it's a pattern. Again, it's a repetition. Okay, whether it happens or not, we don't know. But it's due for a 10, and also it's becoming a high test bar as well, and it's also bouncing off a horizontal level too, horizontal resistance at the top. Cool, 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 cool. Let's move on. The Kiwi, there we go. It's giving, well, it gave a selling opportunity last night. There are 2 high test bars in a row, bouncing off the 50 moving average, and this was also overbought up here, and you get a hook here as well. Okay, and this is also called hidden divergence here. Pushing down, pushing up is a continuation pattern. Okay, cool. Let's see what else we have. Right, on Forex, I haven't seen much else that jumps out. So I'm gonna move on to well, I'm gonna have a look at some stock indices here. That's the weekly chart. Low test and it go back into phase 1 with a lot of strength. This is the S&P. Same thing. Low test bar of the 50 on the weekly and it go back into phase 1 nicely. Okay. I have to put an extra 0 on this because this is not 2000, this is actually 20,000. Okay, so here we're talking about over 1,000 pips, so it's actually huge. That's 100. And so these are huge move. That's actually 1,000 pips. It's always times 10 because it's not 2,000, it's actually 20,000. Okay. So these are big bars. It kind of moves like 150, 200 pips on a day-to-day basis, even more, 300 pips. Okay, on a day-to-day basis, so from the bottom to the top. Pretty large move. Okay. So you have to put an extra 0. That's 1,700 points. Yep. Cool. So that's a big move. It moves a lot. You're talking about an index here. Okay. Right. Let's see. Right. So what else we have? We've got crude oil here, which I'm still pushing down. As I said on the past midweeks, the lower it goes, the better it is. It hasn't given any signal, any clear signals here. It's having just falling like a sharp knife. It's been dropping like a stone. It's going towards the 70, which is the lowest. Yeah, so the levels were like 80, 77, 75, which is now, and then there's another level at 70, which is like the lowest it's been for a very long time. In fact, now it's the lowest it's been for a very long time too. Yeah, it's the lowest it's been for at least 4 years. All right, if you break through this section here, it'll be the lowest in even more time, in like 6 years even. Okay, so you, as I said on the past midweek market focus like a month ago, it usually ranges from 110 to like 75, 77, 75, and then the lowest is like 70, which is quite far away down here. Okay, so that's pretty low already. Now if you look into more detail, this has been giving a very strong divergence for a while, and there hasn't been any much price action. There's been only a low test bar here. You have to see whether it bounced off a level or not. So that bounced there nicely, and here too. And then you will have to look and see the fib from the previous swing low to the previous swing high is a 1.618. So the only one that was qualified was this one here, which failed. And it depends on how fast you move your stop loss, whether you lost the full 1% or 0.5% if you trail it. But it's fine because these turning points, when you get it right, you make like 10-20% out of it, out of one trade. Okay, so if you're looking to go for a huge gain, no less than 5%, you're not gonna go for less than a 5 to 1. You go usually for a big return on investment. So this 0.5% or 1% will be absolutely tiny in comparison to what you can make out of it. Okay, okay, here's the thing, guys. Trying to spot turning points in the market is not an easy skill, and it's not an easy thing to do either. In fact, you're probably gonna have more losing trades than winning trades. But then here's the thing: when you win, you're gonna win much more than when you lose, and that's what it makes it a very fabulous trading style. Um, I mean, it's a pretty fun thing to spot turning points in the market. It is a skill. and it's not for everyone. You need to be trading at least 8 months or a year before you start looking to trade against the trend. Okay, and you need the right education, you need to be in the right environment too. So it is not for everyone. If you're starting to trade, I suggest just to trade the phase ones and trade in the direction of the trend. So I'm gonna move on to something else. Got the US stock market flying still like mad. Okay. Uh, you got Alibaba down here, which I got in at 84. Pretty amazing. I got it down here at 84. I was looking for a nice entry after the IPO. I got in down here, and it's been rocketing ever since. And it's a long time game, so as I said, got no target. It's just a very, very long time game here. Right. Okay. Gonna go into let's see, we can have a look at right, let's have a look at the euro. Oh, let's have a look at, yeah. Okay, let's have a look at the euro first. Right, this is the euro versus dollar. It's been dropping like mad. I'm still holding my short position that I got in like a month or two ago. I think it was one of these ones here. I think it was either this one here or was it? It must have been like, yeah, I think it was that one there. Which I'm holding there. I've moved my stop. It was here, then there, and it's because I'm looking to take it down to like 120 or something. It's kind of like long term, so I don't have to track it that much because it's all locked in. The stop loss is in the right place, anyways. So I'm just waiting for another swing to happen. If so, then I'm gonna put my stop here. Okay, and then as it goes down, the stop will stay there until there is another swing that happens, and then in that case, I'm gonna put the stop there, and so on. Okay, so that's how I'm gonna track it down. I'm gonna be moving, trailing the stop loss based on cycles like that. So trail it, off it goes down, and then, you just track it down as it goes. Okay. Now these are very conservative. I mean, it's a very slow process. Okay, it's a very conservative way of trading too. And you're looking to make a lot of pips out of it. You can make 3, 4, 500, even 700 pips out of it, but you have to hold it for a long time. You're looking to hold it for like a month, 2, 3, 4 months even. So it is kind of like that you have to sit on it for a long time um, to gain a large number of pips. Here again, you'll be looking to go for like 10 to 1s, 8 to 1s, and so on. And it's not much, it's not time consuming. It's not much you have to do really. You just need to trade the stop loss based on cycles. So you're gonna get cycles like usually every 3 weeks or every month, once a month. So it's just very slow, but it's highly profitable if you get the right trend right in the right direction. All you have to do is just to move the stop loss. Okay, and you can do with no target. You can place a target too based on previous levels. So you can place a target, let's say down there, just before the 120, for example, where the arrow is happens to be there. So you can place a target there and be like, okay, once it hits that level, you'll be like, okay, thank you very much. You take your money and run away. So that's another option that you can implement on your trading plan. It's another way of trading, which is trading the stop loss based on cycles. It won't alter your execution. The execution will remain the same. It's just part of the stop loss management techniques that you can do. Cool. That's awesome. So let's have a look and see. You can pull out something else. I've got a few clients of mine that have been holding the cat Swiss since I was looking for turning points down here, and they're very pleased. And they've just been holding it for a very long time. Even there was a trade down here as well, which was qualified too, and they're just sitting on it for a very long time. Okay, uh, so they spot a turning point down here, or even like there, for example, there's another trade there. Okay, there's another trade here. This one, if you're looking to do the same thing and trade the cycles, you get stopped out on that one. Okay, so it really depends how you wanna do it. Um, you can also put a stop to break even, and then just sit on it for a very long time and just leave the stop loss there. So there'll be no risk involved on that one, and it's also a very profitable way of trading, and it's very much long term. It's more like an investment really. So as you can see, you can do all sort of things. You can also trade the stop loss on a day-to-day basis too, which is very aggressive. Okay, you can also wait for two buyer bars and trade the stop loss based on two buyer bars. So after two buyer bars, you put the stop loss at break even, and then again once you get the two buyer bars, you move your stop loss to the lowest low of the second buyer bar. So two buyer bars, move the stop loss to the low of the last bar, and again two buyer bars in a row, put the stop loss at the lowest point of the second buyer bar, and so on and so on and so on. Okay, so that's what you can do. So the best thing to do is to stick to a particular way of trading, have it on your trading plan, and then just make it very mechanical and systematic. Okay, you can speak to your coach to develop your trading plan, and it'll be exclusively for you, depending on the times you're gonna be trading, your account size, if you're emotional, if you're a conservative person, or you maybe are an aggressive person. You know, there are all sort of different ways of trading, depending on your mindset too. You have to be very disciplined. Um, Patience is a key element, I have to say. This patience and discipline. Okay, you need to be in the right mindset as well. If you're not feeling okay with yourself, it's better not to trade. If you're feeling absolutely exhausted, it's better not to trade. So you have to be feeling okay. Okay, then it's fine. Um, Make sure you don't put any emotions on it. Just make it mechanical, as I said, and just stick to your plan. Okay, right. I'm gonna leave it here for now. Hope you guys enjoyed it, and I'll speak to you all soon. Cheers now, and bye now.